Now, it's not just Vodafone and the government that are in a tax tussle. Once signed by the President, the retrospective tax amendment will put the taxman and Genpact, India's largest BPO, at loggerheads. Remember, GE sold 60% stake into two private equity players in December 2004, and the new company, Genpact, has been embroiled in litigation with the government, which ended in 2011 with High Court ruling in favor of Genpact. But the tax department is now ready to move the Supreme Court on this. Suchetna Ray joins us with exclusive details. Suchetna, first of all, explain, this deal happened in 2004. Ideally, it doesn't fall under the retrospective tax change. So why does the taxman want to move the court now on this?
Sources in the Income Tax Department tell us that they are now in the process of drafting an appeal. This appeal will be filed at the Supreme Court under Section 136 to make Genpact a representative assessee. The Income Tax Department sources tell us want Genpact to cough up the capital gains tax from the GE Genpact deal of $500 million. This deal, remember, was signed in 2004. This deal, sources tell us, was routed through Mauritius, and Income Tax Department believes that it was a deal structure which was to avoid any kind of tax in India, and that is why they are moving to Supreme Court to get the tax from Genpact. We'll also have to remember that this deal was struck between GE and two private equity players in 2004, so it does not naturally fall into the ambit of the retrospective amendment of Section 9. It only goes back to 6 years. 2004 doesn't fall into the purview, and that is why sources tell us that perhaps Income Tax Department is going to move Supreme Court so that they can get the capital gains tax from Genpact.